Yo, what's going on, everyone? This is Jimmy with Just Hit Trading. First and foremost, happy Labor Day. Hope everyone's having a good weekend. So I just wanted to post this video to do a quick trade recap on a trade I took this week on SPX, and we are looking at the ES, which is the S&P futures. That's what I always chart with before I take my trades on either SPX or SPY. So let's just get right into it. All right, so I wanted to show you guys what I saw on the chart and what prompted me to take this setup as well as take this trade. So this trade, it actually yielded me about 200% return in a matter of 15 minutes, right? So let me just show you real quick just to have a quick preview of what we're looking at is that I called out this trade on Friday, and this was a 0 DTE trade where I mentioned that we are getting ready for SPY SPX calls when ES hits 3974.12. So this was the area of consolidation overnight, which provides really good risk reward. There was 2-hour demand formed exactly at 3972.5, which was the better entry, and that's actually what I did take. So if I look at the chart, that's what we're going to take a look at to see how this was set up. All right, and you can see down here, we took the trade. It actually bounced, if I zoom down here, this area of demand, right? It bounced here at 3974.12 was the first low where I actually entered the trade, and 3972.5 was that 2-hour demand where it's all, these wicks are really, really close. So it's pretty much exact. And you can see this massive move up, and that's what got me that 200%. To be honest, I actually took profit here at this 1-hour level, which was about 4,001. So I checked the contract later. I bought it at 245, sold it at 720, but it actually ended up all the way in like the 1100 or 1300 dollar range when it rejected at this key fib level at 30.2. And we'll talk about that a little bit later. But first, I want to go back to looking at the chart to see how this was set up. So what I'm starting out here is a blank chart. I wanted to show you how I drew the fibs and the supply demand zones as well as the levels, right? So when I draw the Fibonacci levels, there are two things you can do here. You can draw it from the all-time highs to the most recent lows, right? But because of this massive move up, breaking this downtrend, I actually like this new downtrend from this peak down to this valley. So let me just take my Fibonacci tool. I'm going to draw from that peak to that valley. And so we have our key levels here, and you can even see here we had the golden pocket rejection. This actually coincide with the 200 simple day moving average. That was a trade a lot of people took on shorts not too long ago, and that was a very good play. But here we are. If we were looking at just this week, right? We have a couple key levels here. You can see a drop base drop, which creates a supply zone. So let me draw that out real quick. Right. So this was the daily supply zone. Let me make this red. And then let me actually draw out the zone. Make this red. And you can see here we have 3 levels of rejection, right? 1, 2, and 3, right? I mean, this is after effect, but you can see that 4017, right? That's basically the 4020 area. That's a very key area of resistance and supply. So this is definitely a key level. And so it just coincides that we have the 30.2 Fibonacci level here as well as a daily supply zone. So now if we go down to a smaller time frame, let's just say the 2-hour, right? And take a look. And this is actually overnight action right here. This whole area was overnight action where we saw consolidation, and this was actually right before the jobs report on Friday morning. So we had this rally-based rally, and even if you don't count this candle with this large buyers wicks as the rally candle, you can just see this whole entire area, right? It It's really all consolidation overnight from Thursday night into Friday before we actually had the jobs report come out. So even if you didn't take this as a basing candle to draw your demand zone from, you can really just draw this whole area, right, as an area of consolidation and demand. So this is probably make this a little bit higher, right? So if we do make this coincide with the top of that basing candle, and I'll just place this 2 hour mark. So let me edit this to 2 hours. Or this is how I got the 3972.5. So what we're looking at is an area of demand, an area of supply with the Fibonacci level. And we can see that previously in the week on Wednesday, it rejected this level 1, 2, 3 times, right? So going into Friday, we want to be constant and aware that this 4017 level is very important, that we can find a lot of resistance there. So now let's look at the 5-minute time frame to see what we saw when we opened up to the market. This is Friday open, right? Right here at 9:30, this market open. We rallied from the jobs report in pre-market. Right when the market opened, we dropped. Uh, and I guess you can say that this area of selling is um, it's not surprising, right? A lot of people want to take profits after seeing such a large move up, but you can see all throughout the night right here, this whole green box, we have all this consolidation before going into the market. So we know that there's a lot of liquidity here and a lot of people with limited orders here, so that with it being a demand zone, it's a really good risk reward that if we were to go long here after a move up to kind of retest that demand zone, that we would probably have a good trade. So that's what I did. I called out that demand zone, the 3972.5, like I showed you guys in the Discord screenshot, that we would take along with a target of 4020, which is the next supply. But really, I did have other levels because this is a clean chart that I had levels around here where this rejected, right? The 4001 level, and that's where I took profit for that 200%. But that's really all it is that we go into market, we come down to this demand zone, this 3972.5, take a really good risk reward entry, right? If we're looking at the measurement between 3972.5 to the bottom of the demand zone versus how far up we can go, right, all the way up to 4,000 or a little bit over 4,000, that's a really good risk reward opportunity. So I would take that every single time. I mean, a lot of trading is to see how you can maximize your risk reward and capitalize on those setups, right? So that's about it, guys. That was my long trade. Honestly, I was done for a day after making so much money on that trade that I really didn't bother playing the short because going into today or well in Friday, I did say that that 38.2 Fibonacci level was a pretty important area of resistance, right? We could have taken this short after it broke this consolidation area. If I were still trading the market on Friday, right, if we formed this area of supply, once we broke this level right here, this wick, which is um, where all that consolidation happened, it was good to take a short down back to that area of demand, right? So even from here at 4001 all the way down to 3972.5, that would have been a great trade. Obviously, I wouldn't have played it short until we broke this demand zone again if we were to enter at this area, nor would I take it long. And the reason why I wouldn't take it long again is because we use this area of demand, a lot of these limit orders were bought up. And psychology wise, we tried to push up higher from this level and we couldn't break that 30.2 level. So what's what's the what's the reward for the buyers and the bulls at this level to say that they're going to be rewarded if they buy it from here? Yeah, you could probably scalp it, but it's not a really good risk reward trade again. But once this whole area of consolidation broke, it was good to take it short down to the next area of demand, which I don't have it on this chart. Let me just show you guys here, right? This 3878.5 would probably be my next area of interest. But this is a whole different trade. And just like we had sub here, where we were just talking about this area of demand and consolidation to move up, look what's forming here over the weekend and today on Labor Day, that we have this whole area of consolidation as well, right? So this is going to be in another video where we talk about the upcoming weekend, the watch list, and just here using that same concept of consolidation. If we break above this, I would go long. If we break below this, I would go short. So that's all, guys. If you like this comment, if you like this video and just like this content, just comment, like the video, and subscribe. And see you in the next video. Talk to you all later. Bye.